Hey everyone, sorry about that. Welcome to another live stream here on Sunday. We'll talk about SVB. I feel like a minute ago we were talking about SBF, but now we're talking about SVB. And we'll talk about whatever else you want. So yeah, a lot of chat about what's safe, what isn't. It's funny that treasury bonds can be unsafe if you have liquidity needs. So what's safe is a function not just of the safety of that asset, but also liquidity of that asset. So, there's no obvious sort of answer for a lot of these things. What's up, Ken? We can look at some biotech stocks, answer questions. Hey, Carter, what's up, man? Whatever you guys want to do. I don't know much about real estate stocks, I have to admit. So that's not my thing. We could do some programming. I just signed on, so it sounds like no bailouts, but the final word isn't in. I think the White House will have the final word, and Janet Yellen has indicated there's no bailouts, but Janet Yellen's not the president, so we'll have to sort of see what happens. There's a lot of political sensitivity around this stuff. Physical gold is a lot better than holding a gold stock, obviously, but it costs money to hold physical gold. If you hold a gold stock or gold futures, there's no guarantee that you're going to end up being able to liquidate that asset. All In podcast. Yeah, there's no safety is always relative, right? You can always have your money taken away by the government or the state, as we sometimes call it, disparagingly. The CBDC slave coin is coming. I think the conspiracy theories are a little silly. Looks like dynamite. Dynamite. I don't have any predictions for tomorrow. The stochasticity is significant. Entropy is rising. Be afraid. But I think there's this I want to say there's an ergodicity or an anchoring central tendency towards chaos. So it's hard to know exactly what'll happen today, tomorrow, etc. You can look at a lot of different ways, and I don't know that there's an obvious prediction as to what will happen. Like I said, the stochasticity is significant. You have a lot of nodes in this decision tree, and a lot of them are nodes you can't see. It's a hidden Markov process. The cat is asleep, correct. The cat's a hidden Markov process too. Cats are mostly going to be immune to this issue. So I don't know what I don't look at bank stocks, so I don't know. You know, I think the valuable um, kind of like perspective here is a bank analyst, but like to me, interest rates are hedgeable. One, two, you have duration. Uh, there's a lot of duration hedging that happens. So like Tom Petterfee said that Interactive Brokers doesn't buy higher yield long-term bonds for this exact reason. The duration risk isn't worth it. Um, yeah, so in terms of like, will we see a big deleveraging process where there's this contagion of fear that feeds on itself and et cetera? It's possible, but it's also possible we go back to normal, right? And there's no real way to predict this. It's way too, you may predict it correctly by accident. You may predict it correctly, and assign some wisdom to yourself when you should be assigning randomness. So bonds are fixed income because the coupon is fixed. I wish I could be on Twitter. I pray to God every night. Windows is perfectly suitable programming environment. But I'm getting a Mac too, I'm giving in. I have a new program I'll be unveiling soon. It's very, very significant. I hope it'll change the world. That's right, a third. Another one. You gotta fight for your right. Albanian Big Brother. I met a bunch of Albanians in the last few days. I went to this New York Republicans Club thing, and it was pretty cool. It was with Roger Stone and the chicks from Red Scare. It was pretty cool. Have you guys heard of Red Scare? I can speak almost fluent Albanian. I wouldn't say completely fluent. Actually, I'll take it back. I can't speak Albanian that well at all, but it's all right. Shkaki, what do you have? Si sot, how are you today? I wouldn't describe myself as a polymath. Well, you'll have to see the program when it's ready. It's almost ready. We don't know if this is 2008 2.0, so we don't know if this will be blown over within a week, or we don't know if it's the beginning of the end, right? We have no clue. 2008 was very interesting. Worry is a relative statement, right? Markets react instantaneously to new information. So it's very hard to sort of think about things in terms of worry, right? It's just is what it is, you have to react to the prices. So there's like two ways to philosophize about it. The market's going your direction, you're happy. The market's not going your direction, you're sad. That's kind of not a great way to look at it, I think. Even though your mind wants you to think that way, right? Your mind really would prefer that narrative, and you have to kind of fight that narrative. In terms of Cramer, I think, yeah, the guy he's a good dude. He has to talk about things all day long, which leads to this kind of sort of difficult situation where you're on tape all the time. If you or I were on tape all the time, it could be very easy to put your foot in your mouth. It wouldn't be hard at all. It's either that or you hedge everything kind of like I do. You're careful and intelligent about and measured about what you say. That's very boring. So that's not good for television. So it's a really hard job he has to sort of make everyone happy, and I don't envy his job with that. Can I increase my mic volume? Yeah, I can try. Does that help? What should we be anticipating when the markets open tomorrow? I mean, I think rationality, ultimately, the real move was to buy Silicon Valley Bank puts during the chaos. That was the real move, that a calm, rational person would have said, there's a good chance that this gets bad. Can I buy, it's sometimes called punts on Wall Street, can I buy these punts? Can I buy punts to get a 100x or something like that? And I think that, most of us missed that trade, obviously, right? And I think it is what it is. But that was probably the best trade to make. Just on the risk-reward basis, right? Collapsitarianism. Yeah, so in terms of what will happen next, nobody knows. You have butterfly effect, chaos theory type dynamics at play. The Fed is a node in this. Entrepreneurs are a node in this. In the long run, decentralized money is kind of a node in this, right? And Bitcoin was sort of created in response to events like this, right? So I think government intervention is bullish in the short term, but bearish in the medium and long term. Nobody knows. If you can't pin, one trader in New York can decide to sort of bail or press a short or whatever, and the other traders' reactions are very hard to determine. It's kind of like the three-body problem. This is very, very, very stochastic. There's just no obvious way. If you think you can predict mass psychological movements, maybe with better than 50% accuracy, then you have maybe a chance to win in this kind of a trading environment. But this is not easy by any means. Do you want to look at a bank stock? Venture debt is not a good idea for banks to give out, and Silicon Valley liked to do that quite a bit. USPS, like United States Postal Service, I don't think that's a stock. I think I have to block you. Bank of America? I've never looked at bank stocks in my life, so I don't know if that's a good idea. Literally not once in my life. There is some question about beta, like if you think about high beta, like Snowflake somebody mentioned. is there like some obvious reaction there that, do you want to own high beta? Or you obviously don't want to own high beta. I don't know if that's the right mentality either. I almost wonder if and this sounds really strange, that tech could actually become more of a safe haven than not, especially the tech haves versus the tech have-nots. You kind of would think that startup disruption is kind of positive for a Microsoft or an Apple. And then you would also sort of think that there's some there's honestly question about is this bullish for the other banks, as weird as that sounds. Sponge Tech, all right. Sponge Tech still? I thought Sponge Tech went bankrupt. I don't think there's a bailout, but I don't know. There could still be a bailout for sure. I'm looking at a stock called Viatris. This used to be Mylan before Mylan did their price hikes and were basically forced to sell their company. Yeah, I mean, interest rate swaps would have been a good idea, right? Well, that's the whole idea, Henry, right? If you learn how to analyze banks, you can analyze them one after another. Canadian banks are solid, right? A bank fails because it can't meet its liquidity requirements. So if a depositor wants their money back and the bank doesn't have the liquidity to provide the deposit, then that's basically how a bank fails. A bank can also be declared failed by a regulator if the regulator believes that the bank is insolvent. Credit Suisse. I really don't think it would be productive for me to look at a bank balance sheet. I've stayed away from financials over a very long time. And I think it's probably better for me to continue to stay away from financials. Oh, that's funny. Former Fort Dix correctional officer, sentenced to 26 months. That's a long time. He became one of us, right? 50K in bribes. Paul Wright. Can't say I knew Paul Wright. From 2014 to 2018, Wright was employed as a CEO at Fort Dix. While at Fort Dix, he agreed to smuggle contraband, including tobacco, K2, and Suboxone to inmates. Received cash bribes from outside, traveled to Philadelphia to meet a relative for contraband. Wow. Unbelievable. "26 months. Paul Anton Wright. I'm trying to figure out if I ever knew a Wright. I don't think so. Yeah, right? One of us. One of us. It's like
guess, there is an auction going on for SVB, so we don't know. The bids were due a few hours ago. I didn't put a bid in. I'm joking. Yeah, I mean, I think the bailout talk I see it both ways. I see it as obviously a bad thing in the sense that, we shouldn't encourage poor management to be, like, these guys basically took this risk for this extra reward, and they basically said, well, if the worst happens, we have to, we'll get bailed out. Like, obviously, like, that's not, all these other companies were more prudent. So it's really not fair, right? On the flip side, I certainly don't want to see all their customers get annihilated, right? For no reason. I mean, that's a pretty serious disruption to America. So it's if this were an easy decision, it would be an easy decision, but I don't think, it's that easy. You could definitely see it both ways. You don't want to encourage moral hazard. You don't want to encourage everyone moving to the two big banks. But at the same time, you got to let people punish themselves, right, with bad moves. So it's a very dog eat dog kind of world. So the thing about banks is the whole point of the bank is book value. I really told myself I would not open up a bank SEC filing. I really don't want to do that. But a bank, book value is just assets, right, minus liabilities. And the problem with book value is it's very hard to measure with most banks. It's very easy to measure everywhere else, right? When we pull up the assets, as I've done hundreds of times here, when I pull up the assets and liabilities of a company, it's fairly easy to tell what's a real asset and what's a real liability. Let's do it really quick with Mylan, and you guys will get a sense for like what I'm talking about maybe. So let me pull up some numbers here real quick that are not the balance sheet. So remember, there are three financial statements, right? The big three. Income statement, balance sheet, and what else? You guys know. My kid is going to know this when my kid is like 4 years old. Daddy, what's a balance sheet? Cash flow statement. Good, good. Everybody knows. That's good. Income statement, balance sheet, cash flow statement. Some people say the Holy Trinity, right? The Father, the Son, the Holy Spirit, right? For me, it's the income statement, the balance sheet, and the cash flow statement. That's the Holy Spirit. So there's some differences between these. There's some differences between these statements. The income statement is what I'm looking at now. The income statement is so-called period statement, right? A period is a period of time. And so the income statement discusses or displays the company's results over a period of time. So this is the revenue, which is kind of the first item of the income statement, which most people call top line sometimes, because it's literally the top line. And it's the revenue. So this is how much company product was sold. And this is a drug company. This was called Mylan, but they merged Mylan with a part of Pfizer called Upjohn to create this new company called Viatris, which is like a very corporate name. And so we're going to look at the income statement of Viatris. And let's see. Then we're going to look at the balance sheet. Maybe we start with the balance sheet. It's up to you. I'd rather finish off this income statement because I have delinquent in my work here. And so you can see the period snapshot, right? There's a period of time that this accounts for, and this is accounting for the annual period. and this makes sense because this is their annual report called the SEC Form 10-K. And we'll look at a 10-K for a bank a little later, just because you guys really want me to. And you can see like this company mainly sells generic drugs, so the prices are really low, the costs are relatively high, and you can see that the margins are therefore quite low. It's not like a normal pharmaceutical company with high margins. What do you think the gross margin is? We calculate gross profit divided by revenue, and it's 40%, which is a lot lower than your average drug company. Before the merger with Upjohn, it was like 30%, so it must be that Upjohn's margins were around 50%, because the average is now 40%. I hope you can all see this. And the merger happened here. That's why the company's revenue almost doubled. And Pfizer was basically got rid of their old drugs like Lipitor. So Pfizer no longer owns Lipitor. This company, Viatris, does. Ticker is VTRS, in case you're interested in looking at that. Anyway, the nice thing about having a generics company is that you don't have any real R&D costs compared to a pharmaceutical company. So you can see that their R&D is pretty slim. And the SG&A is actually pretty large, in my opinion, for this kind of a company that should be just a little bit more lean. But the thing about this company is they have a lot of international presence, so it costs them a lot of money to kind of have that big international presence. They also have a mountain of debt, and you can see that here. 500 million in interest here, 600 here, 592 here. So quite a lot of debt. And the question is, will they ever really be able to pay that off, quite frankly? So it's a pretty messy balance sheet. You can see the shares outstanding also doubled because the merger with Pfizer's Upjohn division basically gave Pfizer shareholders a bunch of stock in this company, Mylan, which they renamed as Viatris, because part of the reason was they had this bad EpiPen drama over price increases, so they kind of became a casualty there. All right, let's look at the balance sheet, because when it comes to banks, and this was sort of the first of the Holy Trinity, the income statement. You have revenue, you have costs, and you get all the way down to the bottom line, which is net income or profit. So you sell stuff, it costs you money to sell the stuff, it costs you money to run the company in general, and you're left over with some profit at the end. And the profit's a lot less than the revenue, obviously. So let's look at the other part of the Holy Trinity, the balance sheet, and we want to pay really close attention to that. Well, cash is really easy to understand, right? Cash is worth what it's worth. So, but then you notice it says this one line here. If you could zoom in, maybe get the magnifying glass. You got the magnifying glass, camera guy? All right, let's magnify. Cash and equivalents. What is cash and equivalents? What does that mean? Cash and equivalents. I think that's something that's equivalent to cash. Well, what's equivalent to cash, right? I don't know. That's a tough one. And it doesn't matter so much in industrial companies, right? Because at the end of the day, like how much cash Pfizer or Merck or Viatris or one of these industrial companies has doesn't really make a difference. But how much cash a bank has does make a big difference. So this is just a pill company at the end of the day. They have cash, but it's really easy to determine what cash is. But when we look at the bank stocks, this is going to be a lot more complicated. Okay, how about accounts receivable? This is a big line for this company. This is basically money that is owed to the company for their products. In corporate America, most products are sold on credit. They're not really sold in a cash up front kind of way. So if you're Mylan or Viatris, this company, you'll sell a pallet of pills, right? Like trucks load of pills to your distributor. Don't worry about the cash. Pay us when you can, right? Because you know they're going to pay. If they don't pay, all right, well, you can get the pills back. So you do business that way. It doesn't work that way in retail or something like that. Banks don't really have accounts receivable. They have loans receivable. We'll talk about that in a second. Inventories are another part of what's called working capital. So inventories in this case are, for this company, around $3 billion. And inventories are just products that you haven't sold yet. And they could be work in progress or WIP. They could be raw materials that you're stockpiled, like chemicals in the case of making a pill, or possibly chip equipment, not chip equipment, but let's say, I don't know, chip parts before you make the final chip. That's called a work in progress. Or it could be a good that you're finished and you just haven't sold yet, that's fully packaged and fully ready to go. So banks also don't have this because banks aren't product companies. They kind of provide a service. So we're not going to see inventory or accounts receivable when we look at a bank balance sheet. We're really going to look at the financial assets the bank has and try to scrutinize those really carefully. And the point I'm making here is banks' balance sheets are 10 times harder to analyze than a tech company or a pharmaceutical company. They're actually really, really difficult because you have to comb through all of the fine print to see, well, what exactly are the bank's investments. Remember, the bank receives a liability. Their deposits are actually a liability because they end up taking all this cash in, but it's not their money, right? They're just holding it on. It's a deposit. So when they return the money, there's going to be a liability that money is owed to the customer. So in the meantime, they get to invest the money. And that's kind of the problem with banks, if you think about it, right? Like, they're very asymmetric. When you put your money in a bank, the bank's using it to make money for themselves. You don't get that money, right? They want to pay you the lowest possible rate to get your money in. And these bigger banks, they know you kind of have to bank with them, so they arguably don't have to pay you anything, right? JP Morgan pays nothing on their bank balances. Good luck, right? So it's very, very difficult to have to work with these banks, right? Like, it's really frustrating when there's just not that many banks to choose from, and they're not that interested in competing with you. Competing for your business, I should say, not with you, for you. They just don't care. And, in fact, they've gotten to a point where they can kick you out for not, complying with what they, feel you should be complying with. So anyway, prepaids are something all businesses have. Sometimes you buy products for your company that you will use over time, and they're technically assets, right? So over time, you'll use those assets. It's kind of sometimes called sundry items or other items. Assets held for sale are a special thing for this company. They're selling a part of their business, so those are assets that'll be leaving the company. Property, plant, and equipment is arguably the most important element of any balance sheet, but not so much in financial companies, but certainly in most companies. The assets that a company has to produce its income are property, plant, and equipment, and these are sometimes called fixed assets, which are assets that have a useful life over more than 1 year. So a desk actually has a useful life of more than a year. A computer does too, but a paperclip doesn't, or paper for the copy machine doesn't, or water for the office is technically not a asset that you would depreciate over a year because its useful life, it's expected to be consumed immediately. So even something like a payroll is a useful asset, but it's only useful over a short period of time. Let's keep going here. So goodwill and intangibles are really big numbers for companies like this, and they're sort of accounting fictions that are just created from accounting. And this is going to be really important as we talk about this in a second, because this goodwill, so-called goodwill, is worth absolutely nothing, right? But look at the number, it's 33 billion, right? 33 billion, but it's actually worth zero. Now, why do we have to put goodwill on the balance sheet? Well, it comes from a artifact of double entry accounting. Maybe even artifact isn't the right way to put it, but when you buy a company and you buy it for more than book value, you use that part that was more than book value and you have to put it on your balance sheet, and you depreciate or amortize that over time. And what's funny about that goodwill, though, is it's worth nothing. It is literally worth nothing. But there's this concept that you didn't buy this company for more than its book value for no reason. So you must have bought it for some reason. And you could call that an intangible asset or goodwill. But it's, you have to sort of do an accounting class, and I've done a bunch of these on YouTube if you'd like to really get behind what is goodwill or what is intangibles. But that is basically zero. And sometimes we have this thing called tangible book, and I really want you to think about that for a second, because there's book value. Let me just get Microsoft Paint out here. There's book value, which is assets minus liabilities. And this is Financials for Dummies, or Financials 101. But not everyone studies this as much as I do. And then there's tangible book, which is your tangible assets minus liabilities. I like to look at tangible book because at the end of the day, those goodwill don't mean anything to me, right? I can understand what cash is. I understand what accounts receivable is. Accounts receivable is a real asset. You know, those customers are going to pay me, or I'll sue them and get the money. And you actually can only put on accounts receivable the money that you're likely to get. So if somebody's delinquent, it doesn't go in here. It gets charged off. So this is $4 billion the company's likely to collect in the next like 30 to 90 days. So this is, to me, is almost as good as cash. This, inventories are soon to become accounts receivable, which will soon become cash. And sometimes that's called the CCC, cash conversion cycle. And prepaids are assets too, right? Just because I paid for my Salesforce.com or I paid for my Windows software doesn't mean it's not an asset. Until I use it, it's sort of an asset of mine if you think about it that way. Like when you pay your rent, if you prepay your rent 6 months in advance, that's an asset of yours. That number will drop over time, but it's still an asset. This, though, goodwill, is worth 0. So as I sum up all the assets of this company, what do you notice? It's got 46 billion in assets. Well, that sounds like a big company, right? Wrong. You know, if you deleted this 33 billion, it's only 13 billion in assets. Let me put in the other things, like they have this deferred tax advantage because they're a foreign company, and they have other assets, which are 2 billion. So our numbers in Excel match the numbers in this SEC filing. The SEC filing says the company has 50 billion in assets. But wait, 33 of it is this bullshit goodwill. So basically, the real tangible assets are 17 billion. These are assets you can literally put your hands around and say, okay, this is real. And we're gonna, when we look at a bank stock like JP Morgan, I think is the one we'll look at in a minute, we'll kind of try to get our head around what the tangible book is. Okay, so accounts payable is the opposite of accounts receivable. This is money you owe your vendors and you just haven't paid them yet. Debt is obvious, and debt is going to come really important when it comes to bank stocks. This company has a ton of debt because they paid a lot of money to Pfizer to merge Mylan with one of Pfizer's divisions called Upjohn. So they have a ton of debt. And sometimes at this point I like to put a line up here, which is not part of the balance sheet, but I like to do it myself just to look at it and say net cash. So their net cash is kind of what I think of as their net liquidity. So they have cash of $1 billion in the bank, but they have 18 billion they owe bondholders. So they have negative net cash of 17 billion, which is quite a lot, and we're going to see how to interpret that in a second. So they have taxes they owe various tax authorities. That's around 300 million here. They have more debt that I didn't count, another 2 billion, or 1.2 billion, I should say. So that brings it up to 19 billion. They have, let's see, a couple more things here. Other current liabilities, which is kind of like a generic line of just other things, other money they owe. Other non-current liabilities. Non-current means that they owe it, the amounts are owed over more than 1 year. So current means, in balance sheet talk, current means within 1 year. Non-current means with 1 year or more. So this is where things get really interesting. They have another tax line here, 2432. Okay, so all the liabilities add up to, let's see, it looks like 29 billion. Let's see if Microsoft Excel has the exact number. Yes, 28,950, and this says 28,950, so I'm satisfied I put the numbers in correctly. But here's the problem. If I added all these liabilities up, let's just do it over here, I would think that this company is solvent, right? Because they have 50 billion in assets and 29 billion in liabilities. But wait a second, we already discussed that goodwill is not real. It's just an accounting thing. So they really have 17 billion in assets and negative 29 billion in liabilities. So their tangible, their book value is, let's put this number back in actually. Their book value and tangible book value are very different things. So the book value of a company is assets minus liabilities, 21 billion. But the tangible book value is negative 11 billion. There's a really old joke in value investing circles which says, what's the definition of book value? And obviously the book definition is assets minus liabilities. But the joke definition is it's the most amount of money you should pay for a stock. And the point of the joke is that the book value is literally should be the bottom amount of value of a company. The book value is sometimes called the liquidation value, right? If you bought a company, the balance sheet becomes yours. Think about this as like a Quickie Mart or something like that. Well, you get all the cash in the Quickie Mart's bank account. You get all the money that the Quickie Mart's customers owe it. You get all the inventories on the shelves. You get all the prepaid assets. You get all the equipment, et cetera, et cetera. It applies to any business, whether it's a Quickie Mart or Viatris or a bank or anything like that. But you also owe all the bills, right? You owe all the debt. You owe all the taxes. So when you break down what's the net, what's the book value, it looks positive if you don't include the goodwill. If you include the goodwill, but if you take out the goodwill, which is not valuable, it's negative. So if you bought all the shares of this company and shut it down today, you would owe $12 billion. But the company has a value. The company's worth $12 billion. Why is the company worth $12 billion? Well, because the company makes money every quarter. And that's sort of the way you look at it. So as we look at the shareholders' liability, which is what makes the balance sheet balance, it's assets minus liabilities. So this is a synonym for book value, the shareholders' equity. And we add this up to make sure that it equals assets. And you can see the balance sheet balances because those two are the same number. So if there's any questions, I can kind of explain it a little bit more. But I hope that is useful in terms of the way a balance sheet works. Now we're going to look at a bank balance sheet. It's going to be really interesting because it's a very, very different kind of look. But the book value is what shareholders' equity is. In other words, it's kind of what is the company worth at bottom. And if you're a real deep value investor, you kind of look at book value as like, you know, this is the worst case scenario if the company were to shut down today. Now that's not always true. But you know, it's again, some of this gets very involved in detail. Let's make a model for JP Morgan, and I'll save this on my GitHub. And if you go to my GitHub, you can look at all my models. They're mostly in pharma and biotech and tech, but I'll do this one for JP Morgan just for the special occasion. So the first thing I look at is the stock price, and we have $133.65, and then I want to look at the shares outstanding. So I'm going to go to the SEC website, sec.gov. And I just type in JP Morgan stock ticker JPM. And I could also use a different information service provider like Bloomberg or my system, which is called Godel, and I can use these service providers to like quickly pull up company filings. So if you use one of these systems, you can rapidly like pull up a 10K or 10Q without having to go to a website. But these are sometimes expensive or difficult to use systems. So in any event, this is my system called Godel, which I'll be unveiling publicly soon. We have beta users at the moment, and it's a free system, so it's definitely something that I'm looking forward to showing all you guys. And you know, you can definitely use it at your convenience for free when it's out. So in any event, let's go to their SEC filings on the SEC's website, which is accessible for free to everyone. And what we're looking for is the Form 10K. There's a lot of these weird other forms, because this, I guess when you're a bank company, you have, and you're the biggest bank company, you have tons of different like bizarre SEC filings. So I'm just going to type in 10K and see what happens there, or click here. So here's their JP Morgan's 10K. And this is like the most important document that you could read as a business person for any business, is the so-called 10K. And in fact, if you know what Warren Buffett does every day, it's mostly reading 10Ks. So I developed Godel with some programmers, so I have a software company now. So anyway, JP Morgan's 10K is very important to read, because if you think about what the biggest businesses in the world are, JP Morgan's one of them. So if you want to be somebody who's interested in the stock market or cares, reading this once a year is not too much trouble to sort of undertake. Now, the most important thing about 10Ks to me is that right on their first page, you can see how many shares outstanding the company has. And that might be hard to see, but it says 2.9 billion number of shares of common stock outstanding as of January 31st, 2023, 2.943 billion. So 2,943,355,459. So I'm going to put that here in our shares outstanding. And so this is what each share is worth right? So if you think about it, there's 2 billion shares of the company, or 2.9 billion, so pretty close to 3 billion shares. Each share is $133. So if you were to try to buy every share and you could buy them for that price, it would cost you almost $400 billion. So that is the worth of the company JP Morgan. That is what's called their market capitalization, or sometimes just market cap for short. So the market cap of JP Morgan is 400 billion, and it's the biggest bank in the world as far as I know. So I'm going to just mark down here, this is my kind of method that's hopefully will become a standard on Wall Street. I know a lot of people watch these videos, so this is what I like to put down, the 6 basic elements of any company. So a $393 billion company, each share is $133. So if you bought 1 million shares of JP Morgan, right, it would cost you $133 million, right? That's a lot of money. And you still would not be a big shareholder of JP Morgan. You would not even own 1% of the company, right? 1% of JP Morgan would cost you $3 or $4 billion, just about $4 billion, which is more money than most people have, more money than Mark Cuban has, or Jason Calacanis, or anybody like that. I'm just joking around on those guys. But in all seriousness, it's a lot of money. And if you owned 1% of JP Morgan, guess how much power you would have over Jamie Dimon or someone like that, the CEO of JP Morgan? Absolutely zero. You would have no power over them. You could not tell them anything. They have every right to say, oh, you own 1% of our company? Kiss our butt. We don't care. If you own 5% of JP Morgan, you might have a say, but that would cost you $20 billion. The amount of people who have $20 billion is very limited, and even then, you might not have much of a say. So this is a really big company, and it's going to be very, very hard to push them around. They're also a very regulated company. The key regulator that you should know about is not the FDIC. It's actually called the OCC. And many people have never heard of the OCC. The OCC is the Office of the Controller of the Currency. And this is one of the most important government entities, and almost nobody knows what this is. This is the bank regulator. The FDIC is just the insurance company. This is the company that is supposed to regulate all the banks. So I haven't heard many people talking about the OCC. But let me see here. It says here, the OCC examines the condition of the banks it supervises and their compliance with laws and regulations. Let's see, who is the OCC chairperson? Michael J. Sue. Yes. I remember when he was confirmed. I think there was a lot of speeches this person made over diversity and inclusion, which I'm for diversity and inclusion, but I'm also more in favor of looking at bank balance sheets very closely. So in any event, let's keep going with this 10K. Nothing wrong with diversity and inclusion. So one of the things about JP Morgan that a lot of people don't know is that JP Morgan was not always a really big bank. And one of the things that is interesting to understand is that JP Morgan became a very big bank in the last 20 years. There was a bank called Manufacturers Hanover, and the merger of Manufacturers Hanover, it's now defunct, but Chemical Bank and JP Morgan created this monstrosity. So banks were actually quite a bit more diversified over the years. But this successor to, or JP Morgan's kind of the successor of this bank, but Manufacturers Hanover Trust was sort of like the big mergers that occurred to create JP Morgan. If you really want to learn a lot about banking, I think Balaji tweeted out a chart of all the mergers that created JP Morgan. So JP Morgan also has roots with Morgan Stanley. They're very different companies, but they both started out a long time ago. So the history of banking is actually quite interesting, but let's get to the gist of this. And in fact, I can probably just skip to the financial statements by clicking right here. Jamie Dimon, the famous CEO of JP Morgan, is 66. I'm personally not a fan of JP Morgan, the company, but in terms of like customer service and stuff like that. But remember, it's an investment bank, and it does a lot more than just do commercial banking and retail banking. So let's see if we can find the financials. I see MD&A, so let me go back because I think maybe I missed it. Let's see, financial statements and supplementary data. There might be like this separate, there's often this like separate section. So I'm a little frustrated because this is a very, very big document and I just want to make sure that I get the right, okay, here's usually where it is. Okay, cool, here it is. So the auditor's Pricewaterhouse, and here's their income statement. We looked at the pharma company's income statement a minute ago, but now we're going to look at JP Morgan's balance sheet first. But you can see they have an income statement too. There's revenue, right? There's costs, and there's income. And a lot of the revenue you can see is coming from interest, right? The interest on the loans that they make. They make loans with your money. They don't give you their profits, right? Look at how much money they made, $35 billion. You don't get those profits. They get those profits. Their shareholders get those profits. They get bonuses from those profits. You get nothing. You get the lowest possible interest rate that they can possibly provide to get you to give them their money, to give them your money, which they will hold and risk and lend and do whatever they want with and give you it back if they can hold on to it, which Silicon Valley could not hold on to it. So let's look at the balance sheet in terms of cash and due from banks. Again, there's so many squirrely things in these bank balance sheets that make you go, cash is something that I think anybody can understand what cash is. But when it comes to a bank, it's not that simple. It says due from banks. What does that mean, due from banks? So this is money that JP Morgan has, but it's also money that other banks owe them, I guess. And this is $27 billion. And what's interesting is that that's not a lot of money for JP Morgan. You can see that just the next item is $500 billion, and that's deposits with banks. But wait a second, aren't they a bank? Why are they deposits with banks? It's kind of a funny statement. So we're going to have to look at that too and say, well, where are those deposits actually deposited? Or I assume they're with JP Morgan itself, but it's just sort of a funny name, isn't it? So we just looked at the first two parts of the balance sheet, and I've been looking at financial statements for 20 years. I'm something of an authority on the matter, and bank balance sheets are not simple. So here's the next one. Federal funds sold and securities purchased under resale agreements. Help me understand what that is. Does that sound like English to you? $315 billion. So $315 billion of federal funds sold and securities purchased under resale agreements. Not as easy as pharma or tech. You know, if you look at Cisco's balance sheet or Microsoft's balance sheet, the most complicated thing you're going to see is deferred revenue. This is not so simple. All right, securities borrowed. That is $185 billion. Trading assets. And the other thing here about securities borrowed is look at the fair value versus the actual book value, right? And this is something that Bill Ackman was talking about the other day, that those are two very different things, but let's keep going. Trading assets, $453 billion. Available for sale securities, $205 billion. So this is sort of the most understandable thing. These are basically just securities, right? These are just financial instruments that JP Morgan owns. So I think I can understand that. And this is held to maturity securities. So these are basically bonds, right? Held to maturity securities. So I'm actually going to combine these two, available for sale and held to maturity. And you can basically see that they have 600 billion-ish of securities that they could sell that seem like cash. So between this, and this, they kind of that kind of looks and feels very cash-like. These three, I don't know. They could be cash-like, but I have no clue. But this is $1 trillion of cash that seems to, or cash-like things that seem to belong to them. All right, so now they have loans, and these loans are the biggest part of their balance sheet. They have $1 trillion of loans. But if you look at the investment securities, net of allowances for credit losses, they have this number 600 billion. So I think that's a separate line. Pretty sure it is. Okay. I want to make sure I did all this right, because it looks like there's 425, 205, and then 631, 162. Okay, so we're actually they added them as well. So I added them, they added them. That's a good sign. So now there's the bulk of the bank, which is loans, right? Loans, and we have loan losses. So I'm just going to do net loans. So this is also quite understandable to me. That's an asset. And so in terms of the assets I understand, and I'm being humble here, that I think these are things you and I can both understand, that we're looking at $2 trillion that we understand. This is their cash as well. These are stocks and bonds that they own, mostly bonds, and these are loans that they've made. So almost 2.3 trillion we understand, and maybe 1 trillion is not quite obvious until we do a little more thinking and research. And again, I'm not a bank analyst, so this isn't my forte, but I do know financial statements. So the rest is pretty small, actually. So we have accrued interest. We actually do have property, plant, and equipment, and we actually do have goodwill. And then we have other. So the total assets of JP Morgan is going to be the combination of all this. The accrued interest is pretty small on at least a relative basis. It's 125 billion. The premises and equipment is also small. These are all basically the buildings and servers of JP Morgan, and that's 27 or 28 billion. The goodwill is not insubstantial at 61 billion, and they have other assets. And the scary thing about other assets, right, is it's 182 billion, and you have no idea what it is. Hopefully they explain it somewhere in this massive document. And it could be one footnote in this whole document that blows everything up. And that's why you guys always ask me, like, Martin, man, you're always looking at these financial statements and it looks so tedious and you do it manually. Can't you write a computer program to do it? I write computer programs all day. You can go to my GitHub. I have a software company. Here's a little sample of a computer program I've been working on over the last few days. I am a computer programming, maybe not as good as some of my colleagues, but I'm a bit of an expert in that field. And trust me, when you do these financial statements, you want to do them very slowly and very, very carefully. You don't just want to, copy and paste and not double check the numbers yourself, because this is how things like SVB happen. It's people who do that and put their feet up and say, the computer did it. You have to be really engaged. If you are willing to take shortcuts and screw things up, then that's on you, but I'm not willing to do that. So anyway, those are the assets of JP Morgan, $3.6 billion. And like I said, every page, every letter of this entire document is relevant until proven otherwise. All right, deposits are a liability. That's something a lot of people don't understand. When you look at a bank, the deposit is a liability from the bank's perspective. Why? Because it's not their money, it's your money. And that's the problem, again, with the banking system, is they take your money, they make risky loans with it. When they make profit, they keep it. You don't get anything. They're going to give you a small percentage to keep that money. Should that change, I think we're going to start to see people think about that changing. I think we're going to start to see people talking about some other way of doing banking where it's more equitable. There are credit unions. There are other ways to do banking. You don't have to basically say, here, bank, go play with my money. Go gamble with my money. And if I need it back, maybe it'll be there, maybe it won't. I think that you're going to see more and more people say, wait a second, I see all these big buildings in Manhattan, half of them have JP Morgan as their biggest tenant. Why should I be paying all these brokers, traders, and executives bonuses with my deposit? And the truth is JP Morgan doesn't care about you. They could care less. They're going to pay you the smallest amount that they can pay, which right now I believe JP Morgan pays pretty much close to 0%. They pay almost 0% on checking accounts. And they lend out the money for quite a lot more, right? Their credit card loans, their mortgage loans, those are all very good interest payments. So if they get their money back, they keep all those profits. They don't share it with you. They don't say, well, listen, if I came to you tomorrow and I said,
hey, I need to borrow $100,000. And you said, well, what are you going to do with it? Well, I have this great loan I'm going to make. I'm going to make this guy a loan, and he's going to pay me 8% a year. And you say, okay, that sounds good, Martin. Are you going to share the 8% with me? Do you want to go 4% for you, 4% for me? And I told you, no, I want to go 99% me and maybe 1% you. And you said, what? That doesn't make any sense. And then you said, well, not only that, but Martin, I'm thinking about this. Maybe I'll do this because I trust you so much. But what happens if that guy doesn't pay the loan? What happens to me? I said, well, you're screwed. And what happens to you? Well, just nothing happens to me. So you want me to take all of the risk, but have zero of the benefit? Why would you do that? And I think that banks are probably going to take a backseat to other shadow banks like hedge funds and other things. So I think that the banking system could change at some point, but I think that banks have become this like necessary evil, and because they're necessary, we can't help but bank somewhere. And there's this oligopoly of banks that sort of the government has created, whether it's JP Morgan or Bank of America or Wells Fargo. There's a handful of big banks that you kind of have to go to, especially if you're a big company. The average person can't change a bank. But if Apple moved their money from JP Morgan to Silicon Valley would be solvent. But Apple can't do that. It's too risky. So it's a really messed up system. It'd be nice if there was another solution. I know people have talked about crypto. Crypto is not really robust enough to account for the entire financial system. Bitcoin barely works, to be frank. There could be another system that develops over time. I sure hope so. But I would love to see there be some solution that works. Now, the other thing to keep in mind is that JP Morgan, at the same token, does help the world go round. If you're a big bank like JP Morgan, you are lending money to big corporations like Apple and Pfizer and Merck, and those companies are doing good things. So you need a bank like that who can help you do a $20 billion financing. Silicon Valley Bank isn't worth $20 billion themselves, let alone could they lend you $20 billion. So it's pretty tricky to sort of live or see a world without banks because big corporate activities would cease to exist. There has to be some counterparty that can make a huge loan. Now, at the same token, some of the big non-bank financial institutions like like Berkshire Hathaway can make you a private loan. I've actually gone to hedge funds for private loans sometimes. They're much more expensive, but you can go to BlackRock for a private loan. And these are sometimes called shadow banks for this reason. They're not banks, but hey, they can make you a loan. Anybody can make you a loan. It's just a matter of who's doing it and where's their money coming from. So I do think that we're going to see an increase, quite frankly, of shadow banking due to some of the changes that are happening. So anyway, JP Morgan has $2.3 trillion in deposits and 3.7 in assets. So they're covered now, but they have other liabilities. Let's look at their other liabilities. They have this federal funds purchased liability. What's nice about this is that if you look at the difference between the federal funds sold and the federal funds purchased, they kind of net out a little bit. So we still want to understand what that is. And forgive me for not knowing exactly how every piece of the Federal Reserve banking system works in America. It's fairly complicated. I know a little bit about it, but we want to look at some detailed footnotes. There's nothing wrong with saying you're not 100% sure of something and going and checking it out. So here they have some debt, and this is just debt that this is their paper basically, right? These are the bonds that they've sold to Wall Street to finance their business. And it almost makes you wonder why a bank needs to have debt. Isn't that funny? That a bank like JP Morgan actually has debt. I can understand an industrial company having debt, right? If I'm Pfizer and I want to buy a biotech company that's really promising, I might say, well, I could pay with it with cash on my balance sheet, or I can borrow money from JP Morgan. That kind of makes sense. But it's kind of weird to me that then JP Morgan would go borrow money as well. And it's not a small amount, right? It's $350 billion. And presumably it's a safe bet, but what do we know, right? Everything's safe until proven otherwise. But it does make you wonder. So here's trading liabilities. And again, I think these are like, as I think more about what could trading liabilities be, they have trading assets and trading liabilities. I think these are probably like assets with trading partners, things like that. So it's about 200 billion. Accounts payable, so this is money they owe, and other liabilities. It's a very large number for a vague, a pretty vague statement. So these bank balance sheets are something else, I gotta tell you. And maybe we'll look at like a small regional bank as well, like First Republic. All right, so we have VIEs, which are sort of weird sort of financial instruments. And that's it. We have total liabilities of 3.3 billion. So the book value of JP Morgan is 292 billion. And if we reduce that by goodwill, the tangible book value, right? The tangible book value is 231 billion. But the market value of JP Morgan is 393 billion. So it makes you wonder why JP Morgan's trading at 2 times book value. Most people say that banks should trade at 1 times book value, or slight premium to that, but not more. So JP Morgan looks pretty overvalued, just based on that alone. But we still also have to like dissect this really carefully. But that's like a rule of thumb for most banks, is that they should not be trading at this massive premium to their book value, because ultimately, you know, a bank is nothing more than its assets. And as its assets get worked out, that's really all you get in a bank. It's not like you're buying a franchise, right? You're just buying the current loan book. So that doesn't apply in a tech company, where the book value doesn't really tell you anything other than maybe the rock bottom value of what a company should be. Whereas book value for a bank actually does kind of reflect, you know, what it should be. So do we want to look at First Republic really quickly, and then maybe sort of see if like a smaller bank like that is you know, a little easier to understand? I think my cat is hiding somewhere. So let's make a quick model in First Republic. And First Republic stock is at $81. And so this is supposedly the next bank that's in trouble. Maybe we can figure out if they're actually in trouble. I just want the 10K, but I'm getting hundreds of other. Maybe. Okay, we're gonna try to find it a different way, maybe. Okay, I think I got it here. Okay, so here's the First Republic 10K. And as usual, we have shares outstanding right here, 186. So this is a lot smaller of a bank, right? 15 billion market cap. So you could be the largest stockholder of this bank with a mere $1 billion, or one of the largest stockholders. It's funny that actually in banks, if you try to become the largest stockholder of a bank, you actually have to get regulated as well. So they don't let just anybody be the largest stockholder of a bank. Isn't that funny? It's regulated by the OCC that I mentioned earlier. So for example, if I wanted to go buy all the stock of First Republic, they probably wouldn't let me. Or they probably wouldn't let a foreign company do that either. At least without like explicit permission. And maybe that's a good thing, I don't know. So here's their SEC filing. It's a lot smaller. You can see it's only, help me out, Adobe, 300 pages. And a bunch of that, as usual, a bunch of the stuff is boilerplate to begin with. So let's see if we can't find the income statement. And you can see that these, or balance sheet I should say. So you can see that a lot of these are very esoteric financial statements, unlike an industrial company like a pharmaceutical company or a tech company or software company or something like that. Those are really easy to understand. Bank balance sheets are really hard to understand. We picked the biggest bank in the world, which is probably going to be the most complicated. So here's First Republic, which is a bit easier to understand. Let's look at that. All right, so this is hopefully going to be a lot simpler. They have cash, which I think we can get our head around, is $4 billion. They have debt securities that are available for sale, so these are bonds of $3 billion. They have debt securities held to maturity of $28 billion. Okay, we'll think about that in a minute. They have a tiny, tiny bit of stocks, and then they have a lot of loans. So this is like a very pristine balance sheet. There's no federal funds sold or anything like that. This is like really, really easy to understand. Debt available for sale, I'll just write that, and then held to maturity, and then equities, loans, life insurance, it's pretty small for them, just $3 billion, tax credits, PP&E, almost no goodwill, and then other assets of $5 billion. So this is a $200 billion balance sheet. So this is almost like the same size, basically, as a Silicon Valley Bank. Sort of a top 20 bank, but not a JP Morgan. So this is a lot easier to understand. $212 billion, right? Life insurance, tax credits, PP&E, goodwill, and other. So this just took 1 second. So now we have liabilities. These are deposits. So they've got non-interest bearing deposits. I mean, to me, I think that's like ludicrous, right? That you could deposit your money at a bank and it doesn't earn interest. Non-interest bearing. Like why? Then you have interest bearing checking. Then you have money market checking. I'm just gonna add money market checking and savings to save time. I'm assuming those are pretty similar. And then CODs. And these are all their deposits. So they have 176 billion of deposits. And they have, those are the liabilities, right? And like I said, in a bank, the deposits are actually liabilities because they do have to return that money. It's not their money. They have to return it if it's asked for. So what's an FHLB advance? That's the Federal Home Lending Bank, I want to say. Federal Home Loan Bank, close enough. Interesting. Okay, so that's a debt. That's a debt as well, basically. So unlike JP Morgan, they actually don't have too much debt, right? Although that's a lot from that federal. All right, so they have 15 billion in debt. So that's also a liability, obviously, right? And then they have this other liability, which is 3 billion. So total liabilities, drum roll please, is, wait, I didn't add that up right, hold on. As I sum these, okay. Total liabilities is 195 billion. So the book value is 17 billion. So here's where the rubber hits the road. This is really interesting. I want you to pay attention to this. The book value is 17 billion. And it makes sense, right? These assets are worth 212, and these liabilities are worth 195. These liabilities won't really change, right? People have put 176 billion in this bank. So if they want the money back, they're not going to wake up one day and ask for, oh, well, I want 170 back. Or they might wake up one day and say, I want 200 back. No, they put 176 in, they have the right to get 176 out. But on the asset side, this 212 billion, this might change. Why? Well, these are all bonds. The cash won't change, What about these loans? Well, if they don't collect those loans may not be worth 166 billion. They might be worth 150 billion if they're bad loans, right? The most they could be worth is roughly that much. But what about this? They have 28 billion of government bonds. But what are those bonds worth? What if they're worth less than what they're saying they're worth? What if those bonds have dropped really fast, which they have? What then? Well, the company only has 17 billion of cushion. So maybe that 17 billion is worth less if I mark this down. So what if I wrote another column here called reality? And I said, well, in reality, the cash is worth the same, but maybe this debt is worth the same. But what if these bonds were down 20%? Okay. And these stocks are worth the same, these loans are worth the same, this stuff's the same, this stuff's the same. This is not worth anything in terms of liquidity, neither is this. This I don't even know what it is, but I'll count it because I'm a nice guy. So now we're talking about real assets, and I'm being somewhat favorable here, of 206 billion. Well, these we all know, as I said, are going to be the same. The liabilities are still 195. So the actual book value of this bank could be as little as 11 billion. Well, what would happen if we had this, reality and fear, and that people said, you know what, I don't want my money in this company, First Republic. I'm going to take some money out. And what would end up happening is, well, I don't know if they can use other in a pinch. I don't know what is in other. So maybe they can use half of that to meet liquidity in a pinch, right? They can use all that cash. They can use all these available for sale. They probably can't use this held to maturity unless they sell it for an even more discount. Let's say they can use all these stocks. They can't really use the loans, right? Because the loans are, not exactly liquid. Let's say they're somewhat liquid. And I'm being very generous. If they had to sell all their loans tomorrow, they couldn't do it. Same thing here. They can't use their life insurance. And I doubt they could use their tax credit. So their actual ability to meet these loans is somewhat limited. And they still have all those liabilities. So I don't know if half of these deposits wanted to move, they would not be able to do it, right? If $80 billion left this company, in fact, even if 10% of First Republic's deposits left, they don't have the cash to make them whole. They only have $4 billion in cash. How are they going to be able to withstand Monday? Oh man. I think I just I might have to make a phone call real quick. Shit. Oh man. Okay, well, that's just one bank. There's other banks. Let's look at Signature. Signature is $70. Go to
their investor relations section of their website. Going to look at their annual report on Form 10-K. Some old white guys here, pretty sweet. Okay. 62 million shares outstanding. $70 a share. So this is an even smaller bank. This is only four billion market cap, right? I'm just gonna upload all these to GitHub real quick, so you guys can download them yourselves. So just give me 2 seconds to do that. Okay, so those are all on my GitHub. You can go to github.com/Martin Shkreli. If you don't use GitHub, it might be a good idea to sign up. GitHub is was bought by Microsoft for $8 billion. It is where the world puts their computer code. And if you think that's something that's too advanced for you, well, there are kids with GitHub accounts that are 8 years old. And there's actually one of my favorite rock stars, Rivers Cuomo, has a GitHub as well. So the world is moving on. I'm sure you guys know the rock band Weezer. The world is moving on to computer programming, and computers run the world, so now's a good time to join GitHub. If you're really elite, you have a Hugging Face account, but I won't even mention that yet. But GitHub is a place where you can show off your programming. And if Rivers Cuomo has time, he's a literal rock star to program this much, then I think you do too. So anyway, let's look at Signature Bank, quick GitHub plug. But you can download all the files I just made by going to my GitHub. So you don't have to only put computer code on GitHub. I have a lot of computer code on there too, but I also have, it's for any kind of files that need version control. So let's go look at this company, Signature Bank, which hopefully is a lot more solvent than First Republic, because First Republic doesn't look so great. I guess First Republic can tap more home loan from that Federal Home Loan Bank. They could tap more liquidity, because I think they made a lot of home loans, so it makes sense that they should be able to liquefy those a little bit. And Wall Street, oh, let me see here. The person's calling me back. Hey, have you looked at First Republic? They would not be able to meet. Yeah. I'm live streaming right now, and there's a fucking gigantic hole in First Republic. No, I would just, it's just frightening, that's all. Yeah, I would imagine they'd have to open up quite a big facility to just basically liquefy all these guys. And that's the only move that would really please Wall Street. Otherwise, Monday is going to be a fucking catastrophe, I would think.
Well, yeah, no, I've got you. I don't have you on speaker, but I think like, yeah, yeah, heaven help us, I guess. You know, unless I don't. I mean, you know, I feel two ways about it. Like, I don't think the Fed should intervene unless it's an emergency. But you know, the question is, when do you make that call? You know, is it one day could make a big difference? I don't even. I mean, I'm not sure they should open bank stocks on Monday. Like, you know, unless there's like a serious tarp in place or something like that, because I. Yeah, ultimately, none of these loans are liquid, right? So, like, you know, once the depositors flee, it's you know, it's just a game of right. Right. Yeah. Yeah, no, you could have real collateral impact, but I mean, to me, I just it's just so funny how the mismatch of these um, the balance sheets are, right? You have these mortgage loans that are fundamentally, you know, I mean, you tell me, you know better than I do, but like, can you liquefy these other than through this FHLB? Yeah, I'm curious what he thinks. Yeah, the theory is that you should never have a depositor base that could actually like act en masse, right? But now the world is so much more connected with Twitter, and it just takes one idiot to start tweeting like a moron and saying, "Oh, yeah, it's so weird." Everyone's blaming Jason. Yeah. I guess. I mean, I don't know. Like, to me, I don't want to stoke any fears either. But like, I wonder if like you actually need to. Yeah, no, there's no upside in doing it. But like, is there like needs to be a fundamental rethinking of like you have this place that requires instant liquidity for your deposits, but then they're making 30-year home loans with most of the money, and it's 20x levered. And oh by the way, the moral hazard is. You're not getting any of that fucking upside of those loans. You're the fucking feed for the cattle or whatever. And something goes wrong, there goes your money. But to me that's the problem, right? It's like yeah. That's what I'm trying to figure out. Like, can these guys hedge that, or do they just hold them to maturity? And that's the part of the banking analysis. I've never been a bank analyst in my life. Like, I didn't spend one day on bank stocks. Even for banks like First Republic and Signature. Even for the banks, the regionals. Well, what happens if I mean, it's on the balance sheet, right? So I'm assuming the stuff in the balance sheet is their, it's their loan, right? And like I would imagine like the MBS desk at like Goldman or JP Morgan or whatever, at their, they're traders too. So at the wrong prices, if they see a flood of these, right, they're going to say, wait a second, I'm bidding 95 cents now, or 90 or 85. Yeah. Yeah, it's not gonna make much of a difference to us. Yeah, I agree. Yeah, Canadian bank. I agree. Yeah, no, I think that's the game plan. I mean, yeah. No, I think that's the move. I think that, the question is like, and somebody was like making fun of it, but like, the French Bulldog software as a service company for French Bulldog lattes or something, it's not going to make it. But the real SaaS companies that, are in trouble, or the real biotechs that are in trouble. The problem with biotech is, right, there's no asset back, right? Whereas
yeah, a SaaS company is, a little more serious, but a biotech that has 50 million that needs to make payroll, I mean, maybe a short-term loan would work, but like, you know, I don't know. We'll talk more about that offline, I guess, but. Right. Right. Well, this is where, like, I think the shadow banks, right, like Fortress, and all our other friends are gonna do great if they. Oh, if they can move now, move quickly, it's great. Yeah. Probably not. No. Yep. Well, actually, I called Activision, and I was like, "Look, you guys should," and like some of these other big tech companies, like you should all fucking be extending loans to your peers. But I don't think you're going to see any of that. Yeah, of course. What would you do, right? Yep, exactly. Yeah, I think you're definitely going to see the sort of private capital space step up. And the other question is like, what will the feds let people do? Because like there's foreign, not just Canada, but there's tons of other places that want to deploy capital. But I just don't know that. Like when I look at these balance sheets, it's all fucking home loans, right? Which are good assets, but they're liquid and they're definitely sensitive to runs, right? They're sensitive to. Yes. Huh. It's all corporate. Yeah. All right. Okay, I'm gonna finish these models out. Appreciate it, and I'll be around tonight. See you. Bye. Oh God. Okay. So, well, what can we do? I think this FHLB could be used to liquefy the banks. So they basically have to let the FHLB window open for a huge amount, which basically is nationalizing the home loan business, which we've already done in this country a couple times. So, it's a complicated picture, that's for sure. Here's what I'll say. I think that basically, if you look at the problem with banks fundamentally is that no bank is impervious to a run, right? That's the whole point of a fractional bank or the fractional system, is that they don't have enough cash for, let's say, look at this company. They have 88 billion in deposits. This is Signature Bank based in New York. They have $6 billion right now. So if 10% of their customers want their money back, they don't have the cash for that. They have enough cash for 7% of the people who have deposits with them. And I think a lot more than 7% are worried about the solvency of the bank. Now, they can do this. They can go to this available for sale and sell that off, which is just pretty nice. So now they've got 24 billion, which is 28%. This held to maturity, they could certainly bail on some of that as well. So that would be like more in an emergency, maybe they could sell that. That's already marked down, most likely, but they could sell another $5 billion of that. So theoretically, let's sort of look at that other kind of like run scenario. This is all useful. This is probably not as useful. This is probably useful. This is pretty deep discount. This is not a deep discount. So this is at least like the somewhat liquid stuff. So I don't know how this FHLB works, if they can really tap, how much they can tap. SB looks, this bank actually looks a little more liquid, quite frankly, than the others. First Republic looks uglier than this one. But you could still see a deposit run. These guys have reports too. So the FHLB book is 115 billion. So does that make sense to you? That Signature is 10% of the FHLB book? Is this just New York? Or, yeah, this might be just New York. Well, Credit Suisse doesn't have the US problems. Shut up, Katie. Whoa. I don't know if you guys can see this. Can you all see that? I did not know that. I thought that was a government, like a government. Okay, so they have $1 trillion in advances. This is the FHLB. So the mortgage market's around 12 trillion. They have $1 trillion out there. So they'd have to expand their balance sheet quite a bit. I think that the fundamental problem is the liquidity mismatch. And the smaller banks just sort of having a, you know, I guess vulnerability, maybe the best way to put it. It's a pretty profitable entity, I have to say. Oof. This is very, very interesting situation. Well, yeah, right? Assets are good until reached for. Well, I don't know much about this entity. Is the FHLB a private company? Is it held by member banks? Is it... Top 10 regulatory capital stockholders. Page 68. Shut up, kitty. Okay, so it looks like it's, okay, the banks that own. What do you think, Kitty? What do you think? All right. So I don't think the banks can bail out the banks. That doesn't make a lot of sense, does it? That'd be a little odd. The new cat is Nibbles. All right, so to me, it's very odd that that you can grab an FHLB loan to liquefy your book. Because ultimately the banks that can lend you the money are still, they still have mostly the same loans in their balance sheet. And there's normally nothing wrong with these loans. Mortgages are good loans, but if everyone wants their money back, that they're not so great, right? Oh boy. FHLB seems to be owned by a bunch of regionals. It said the PNC is the largest stockholder of. Shut up, kitty. Huh. Well, what can I do for you guys? I'm so happy you're here joining me on watching the news for whatever's going to happen to SBNY. What would you like to see? And how can I help? Credit Suisse? Nibbles is definitely hungry. Yumi rework? Shut up, kitty. I said shut up. I'm gonna make kitty stew out of you. I do think everything will be okay. I hope everything will be okay. SBNY looks somewhat solid. I mean, it's kind of scary that they have they're 1% of the FHLB book. So they owe, basically these liabilities aren't going to change, and maybe they basically have 30 billion in liquidity on 100 billion in deposit/debt. Doesn't seem as bad. 8 billion in equity. I don't know. I think this is all a question of confidence, right? They're going to take the money and put it into JP Morgan, basically. And the big will get bigger, and the moral hazard will continue, and basically that'll be that. Holy shit. Shut up, kitty. I just lost because of you. Damn it. Hugging Face is a GitHub for basically for machine learning. You can take it with checks, so it doesn't make a difference. Try to hang on for dear life. I feel like I'm as Silicon Valley Bank in this game. I know this kitty, she wants to be part of the stream. I love you, kitty. I love you. Yes, I do. Let's see. Bless you, kitty. Bless your little heart. JP Morgan will be fine. If JP Morgan's not fine, we get much bigger problems. Bless you, kitty. Well, this isn't so good. Alright guys, well this was fun. I have to get back to programming and doing other things, but hopefully you found this to be helpful. In general, I think the Fed should probably come up with some way to boost confidence in banks. A lot of banks, by their nature, are susceptible to runs. So liquefying home loans or other ways to like increase confidence in these smaller regional banks, they're really not run-proof. I mean, that's the problem. No bank is truly run-proof until, I mean, no bank will ever be run-proof. And maybe that's the lesson in all this, is that no matter what we do, banks will never be fully run-proof, and that there should be some way to kind of, I don't know, make these banks a little bit more robust. Maybe they should be lending less, the balance sheet should be smaller. There's a lot of sort of questions as to what, you know, the right way to do this looks. I feel like, you know, you're gonna continue to see this stuff, a very small misstep, plus this connected contagion and fear that we all have, thanks to this sort of like very networked world we live in, can create these panics. And when you throw Wall Street into the mix with things like zero-day put options and stuff like that, it can be really dangerous. I want to make sure you guys get the link for my new web app called Godel. This is a financial information app that I created to compete with Bloomberg and other financial apps, so you can apply for a beta, access to the beta. It's still in a fairly early stage beta, but you're welcome to join the community. Any questions you want to ask me, you can go on there, and I'm happy to chat with you about any stock on Godel. I'm also coming out with another app in the next few days, hopefully, that'll be, I think, really groundbreaking. There's also my scientific application called Drug-like, and you're welcome to try that out. It's a really neat, really neat tool where you can basically perform molecular interaction calculations on the web. It's actually free up to a certain amount of computation, so we provide the first ever access to a software package like this for free, which is really kind of, to me, incredible. I wish this kind of thing was available when I was a kid. I would love to try it out. So this is, you know, a fairly small molecular screen we can do for
10,000 compounds or so, and actually, like I said, there's really nothing like this available on the web for free. And basically this is a molecule, a protein in the body, and this is a molecule that could be a drug one day, or a perfume, or a animal pharmaceutical, or any other molecule you want to interact. Pharmaceuticals are one option. And you can actually click and see how much energy it would take to bind these two drugs, or these two molecules together on a theoretical pocket versus the real one. And you could try to improve the relative energy needed to make that bond. And that's really what the biochemical world is all about. So you can see this rapidly calculating thousands of combinations. The first 10,000 combinations are free. After that, there's a nominal fee. But like I said, there's no software like this on the web, period, free or not. So, you know, it's a really expensive software from other companies that's like 50 grand or more that I've used over the years in my career. So being able to put this out was a lot of fun. Again, it's called Drug-like. And then if you want to sign up for Godel, my financial terminal that hopefully will be far more advanced, and also have a free tier that professionals can actually kind of use to look at the stock market and other markets in a really sophisticated way. I think that's something that, you know, is also something the world needs. So the tools out there for finance are pretty shitty, and I think by providing like a really sophisticated set of tools that could, you know, basically, you know, compete with Bloomberg and the other sort of terminals that aren't online. This is just a website you go to. Like I said, you can get access if you sign up for that Google Forms, and there's a lot you could do with it that's very, very similar to a Bloomberg, and at a fraction of the price, and definitely a free tier for anybody that just wants to look up some stock prices or something like that. It's free. But if you want to do more advanced things, you have to pay a small amount, but it's still a lot cheaper. So you can sign up for Godel on the form that I sent out, or you can just wait and it'll be available for the public fairly soon. We do intend to provide an API, but we're more of an API consumer than provider at some point, at this point. But there'll be a lot of really cool tools that straight from my mind into this world, so a lot different from kind of the current systems at Bloomberg and so forth that aren't very good in my opinion, and way too expensive to use. So anyway, hopefully you'll see some of that innovation really soon. Again, there's nothing quite like this on the web, whether it's TradingView or any other app. This is really, I think, state of the art. So anyway, thanks for watching, guys. Catch you next time. See you on Monday. Should be really interesting. I also have a Discord if you want to chat on there. I'm usually there 24/7. It's discord.gg/Martin Shkreli. So just discord.gg or discord.com/Martin Shkreli. That's the Discord, and I'm there chatting virtually all day, every day. So if you have any questions, you can hit me up there. I use Godel quite a bit for my own financial work. I built it kind of for myself, so you're welcome to use it too. And you can ask me any stock question there, and I'm happy to answer very promptly as part of that. So I think that's the Discord link, but should be correct. Yeah, discord.gg/Martin Shkreli. Anyway, thanks a lot, guys. Talk to you later.